a couple of weeks off, Larry Kendrell from Cadence Bank rejoins us now for another installment of Financial Focus. We're so glad to see you again.
Thank you.
And one of the age-old questions here on Financial Focus, we got to check back in with the stock market.
Okay. Very good. Things actually were very good today. I'm stumbling over that because it was too good actually. The Dow is up. The Dow is up 54.9 over 10,000. The Nasdaq is up, like 15. S&P is up. Gold is up, and luckily maybe or whatever, I think oil was down about a dime. So, but about what made this, we said a lot of policies in, I guess Washington D.C. would affect what's going on in the market. Well, today we can kind of say it's the earnings season. And all I'm saying there is, you got January, February, March. Okay, that quarter's ended. And so earnings season, what goes on in April, people start talking about the earnings. And the Nasdaq had a really good pop today, and because of Qualcomm, we know about them. They had like a 5.2% increase, which moved their stock up about $42. Well, why? It's because they changed their estimates for second quarter earnings. And we all know about Best Buy. We all go to Best Buy. Best Buy also stronger expectations for earnings this first quarter than expected. What did they do? Their stocks moved up 4.7 to $43.10. So both of those are good.
Let's back up just a second.
Okay.
You said that all of this stuff is looking very positive because of earnings season. Yeah. Explain what that is.
Well, basically, what it is when we call earnings season, that's when all of the companies start telling you how they did or what they think they're going to do. And when they start reporting those earnings, and when it's just better than expected, it's expectations. Anytime you can exceed expectations, you're going to get a good positive bump as a general rule. And so that's what's happening. And now a broader base, as far as that's concerned, it's S&P 500.
Okay.
Now we're about to find out here in a couple weeks how do we do the first quarter with S&P stocks, okay? A broader base. And right now what they're saying is it may be up year over year like 36.6%. That's fantastic actually. So that's some good things. Tough economic times, but maybe some of these companies are beginning to earn and look a little better.
Proves that there are benefits in expecting for the worst and hoping for the best.
Always. And I think this is a perfect example, a perfect time to deal with this word, and that is timing the market. So many people, when you talk to a lot of folks, they'll say, okay, look, we want to time the market, we want to get in just right. No one knows when these fluctuations are just going to pop. They're going to take a minute. So what I'm telling you is time in the market. Get your good equities, stay in there, and you may have to ride them up and down a little bit, but when you look at a Qualcomm, when you look at a Best Buy, they have been now they're coming back. Time in the market is key, I think.
Of course, we always check in with mortgages real quickly.
Okay. Mortgages.
Okay, so we went on a high note, now we're a little...
Yeah, the thing I would say about mortgages is this. The delinquencies are extremely high, and the terms that they're finding out, you look in there, there's those mortgages that are really backed well, or the people who have applied for those mortgages have great credit ratings. Even some of those are beginning to look bad. Right now they're saying that performing mortgages fell. Now performing means people who are paying them back. Fell to 86.4%. So that's a low. That's a low of probably seven consecutive quarters of going the wrong direction.
But we like to end on a happy note.
Okay. Well, the happy note. Okay. I know what you're saying. Is the unemployment, and this is it. U.S. workers filing new applications for unemployment insurance. Down sharply last week.
Yay!
So okay?
All right. Thank you, Larry. And that's it for Financial Focus Last Look. Coming up right after this short break.